Hello, welcome back. Time to talk about Twitter, a stock that has been heavily beaten down, as you can see here in the charts. Used to be around 80 at some point. That was the top, near the top. And now it's sitting at 37.08, down 2% from the last trading session. And so the company has lost, and the stock price really has lost about 50% of its price. And you have heard that, you may have heard, that Cathy Woods has also been selling a lot of Twitter as well. So, what's going on with the company? Is it an interesting purchase now that it's down a lot? Let's start by taking a look at the outstanding shares here. You will see that they have been skyrocketing. I mean, back in 2014, the company had 500 million in shares, and now they have 800 million. That's a steep increase here. It's like 60 to 70% or something of that sort. And luckily, at least it's many years till that has occurred, since that has occurred really, and it's not accelerating. At least it's kind of sort of like linear, becoming more and more linear, if not even not increasing at all lately. So that's good to see at least. So the company's next 12-month PE is sitting at 52x over here, and doesn't have one right now, which means that the company is losing money probably. Let's take a closer look though at the financials, starting with the income statement as we usually do. And you will see that the year-over-year growth is very variable here, which is interesting. I mean, past couple of years or so, the company hasn't been growing a lot. But now in the last 12 months, we're looking at a 40% year-over-year growth of revenue. That's great over here. And the same thing applies with gross profit. Let's take a look at the net income though, which is, as expected, is in the negative. Company actually made a lot in 2019 and 18, but now they're losing a ton of money here, getting closer to profitability again. But it's interesting that they started losing money and started losing a lot of money over here, even though the admin expenses were not that many really. They still started to lose a lot of money in the last 12 months or so. And it's interesting because previously they were doing much better. And again, there's not a steep increase in, at least not a massive increase in cost of revenues here that would make sense for that. Okay, balance sheet of the company. We will see that the total assets of the company keep increasing. Obviously, we did see that the company actually had a lot of equity that they were actually, allowing investors to buy, and they were issuing more shares basically. And so that matters a lot, and you will see it here in the additional paid-in capital. Company making a lot of money from selling shares to investors, because this is funding by investors here. And the total equity of the company from 5 billion to 7 billion. But again, you have to account for all the stockholders' equity added there, because actually the stockholders bought a lot of stockholders bought the company, bought shares in the company. So cash flow. You will see here that the cash from operations is positive, which is obviously a good thing, and starts kind of increasing here, which is also nice. Definitely from 2022 is better for sure. And the cash from financing over here, and actually cash from investing first, we missed. It's about the usual. You would expect a little bit of investment in market securities. They actually sold a lot of market securities in 2021, which is interesting. And financing here, it's mostly positive, but there is some negative in some years. Negative is good actually for financing, because it means the company is paying back debt. And over here, they're actually repurchasing common stock in the last 12 months. That's interesting. I'm not sure if I would do that with the money that Twitter has, but they are doing it. And what about debt here? Yeah, they're issuing debt, a lot of debt actually. Every year they're issuing more debt. Okay, the free cash flow of the company is sitting at about 300 million, down, actually up from last year, but down from the previous years. And so yes, again the company is a little bit variable in terms of its free cash flow here. And I want to calculate, actually I will do it later, but let's first take a look at the debt, because we will calculate the free cash flow as a multiple of its market cap over here. The total debt to equity is sitting at 76%, and that's relatively high, not too high, but I would like it to see a little bit less. and the return on assets of the company are mostly negative or close to zero as expected because the company is not making much. But the multiples is something that I wanted to point out, that seem to be getting better than what they used to be back a few years before ago, and especially 2020. And this I like to see, because this is a massive. It's actually decreasing, but actually a decrease is good here, because this means you are getting more sales for the amount of money that you spend buying the stock, and so the lesser the better. The smaller the number here, the better it is. And this is decreasing from 2020. That's good. The free cash flow. Let's use a calculator here to examine the 5-year free cash flow of the company. I'm going to do the addition: 670 plus 855 plus, this is what I'm adding, this row over here, plus 762 plus 119 plus 324. So 2.73 billion the company made in 5 years, divided by 5. We're getting that the company is making about $550 million a year in terms of free cash flow. And if we give it a multiple of 20, we're getting a company that should be trading at around $11 billion based on its free cash flow. It is trading at 30, which is almost 3 times as much, so it's expensive for my taste. And obviously I would like to get it at about $12 or $13. That would mean, in order to to have a free cash flow that actually is close to a 20x multiple of free cash flow. You could maybe, and let's go back to that number, it was about that. So give it a multiple of 30, we're going to get a 16 billion market cap. So it's a little bit better if you allow for a multiple of 30, in which case you would probably want to get the company at $20 to $23 or something of that sort. But as it is right now, I like Twitter, and I think it's going to continue growing, although it has some shortcomings over here. Yet I want to buy it at a good price if I am to buy the company. And even though it has fallen a lot, as you can see here, it can still fall. And if it does fall and goes to like sub 20 or something, maybe even mid 20s, then I would really think about it, and maybe I could create another video. So at this level, it would be very, very interesting actually, especially if the numbers get a little bit better in terms of its free cash flow, which seems to be the case based on at least on the analyst expectations. So maybe next year or so, maybe in a few months, this can be a more interesting opportunity. But as it is right now, I think I'm gonna pass for a while and just wait it out a little bit. So that's what I feel about Twitter. Let me tell me in the comments below what you do think Twitter is gonna do in the next few months, and whether you are actually buying it. Do you actually buy Twitter right now? What do you think? And thanks a lot for watching. And if you do like these kinds of videos, please subscribe and like the video. And I'd love to see you around. You can also join our Discord channel. You can find a link in the description box below. And in the meantime, take a look at this video that I made earlier, and it's about Amazon. And thanks for watching again. I'll see you soon. Bye bye.